Hey y'all, sorry about that. Audio cut out, had a little bit of a glitch, figured it out now though. I believe I went mute about 8 minutes in, so I'm going to quickly go over what I was saying when I went totally mute, and then we will hop right back in to our the news segment that I was on before I cut out. So, oh, hang on. 1 second. Love it when technology doesn't work the way that you want it to. Okay, we are back in business. Okay, so basically what I was saying, looking at ASIC prices, we're in all-time low territory. We ran a poll on Twitter last week on Hashrate Index, asking people where they thought the bottom was, and the majority of respondents said $5 to $10 per terahash. That seems pretty reasonable to me. That would put us back into a kind of more manageable ROI territory for new gen ASICs. And some other respondents said that it might even be lower. I think 22% said under 5% or under $5 per terahash. And then another 13% said that we've already basically hit the bottom. And then another more optimistic contingent said maybe $11 to $15 per terahash. I believe that was about 28% of respondents or something like that. So all of that being said, definitely got further to go. I think when you look at Bitcoin mining economics and the state of the industry, and speaking of ASICs, our first priority on the news docket today is BlockFi filing for bankruptcy. BlockFi, known to most Bitcoin folks and crypto folks as a lending service for their Bitcoin or their other cryptos. Lock up your Bitcoin, get a loan in return, collateralize it with the Bitcoin. But for Bitcoin miners, BlockFi is actually one of the bigger ASIC financing shops. So a lot of miners, some public miners like Bitfarms and some others that I don't know off the top of my head, as well as private market miners, use BlockFi to finance their ASIC purchases. Now, all of these financing deals are different. It depends on the financier, but sometimes they're collateralized with the actual ASICs themselves. And as you can see from the ASIC index data that we just showed, that can be a problem if you have to get margin called and need to top off your collateral, right, by committing more machines. We've seen how this can go sometimes with Stronghold, for instance. They recently defaulted on something like 26,000 new gen ASICs that they received or that they bought from a loan from NYDIG, and NYDIG clawed back all of those ASICs after Stronghold could not finance or could not service the debt anymore. So all that being said, this article focuses mainly on BlockFi lending service. Talks about how they owe about $729 million to their largest creditor Ankara Trust. But I wanted to spend some time talking about implications for Bitcoin miners and what this bankruptcy would mean as BlockFi goes through the Chapter 11 process. The debt that Bitcoin miners do have with BlockFi will not go away, just like any other bankruptcy. That debt is going to be hopefully assumed by a new creditor through the bankruptcy proceedings. Chances are this will happen in a 363 asset sale, and someone will buy the claim to that debt. Likely for pennies on the dollar or for a fraction of what it's actually worth. We've seen Compute North's bankruptcy and 363 asset sale. Most recently, it was the first, and I would say, well, it was the biggest bankruptcy to hit the Bitcoin mining industry this year. Is the one that got the most press. Certainly, there are smaller bankruptcies that go on all the time, but this Compute North was the second largest host in the United States and in North America. And when they went belly up, they went Chapter 11 and did an asset sale, which we will have a newsletter on tomorrow morning. Check out your inboxes. I do some research on who sold what or who bought what for how much and what that means for the creditors in the case and all of Compute North's unsecured and secured debt. All of that said, though, as we saw with Compute North, its assets and its debt were sold off in the auction and assumed by new parties. And the same thing will happen here with BlockFi's bankruptcy. those debts that these Bitcoin miners owe BlockFi will not go away. They will just be assumed by a new party, and the piper will get paid eventually. And with that in mind, let's go ahead and hop over to our second news item today, which is Canada's Manitoba province enacts an 18-month moratorium on new crypto mining. The subtitle of this article says the local heavily indebted public utility has received up to 4.6 gigawatts of requests from miners looking to connect to the grid. That's a pretty high number. 4.6 gigawatts is a lot. And it's worth noting that those are just requests. That is not active load drawing from the grid from Bitcoin miners. But all of that being said, Manitoba is still enacting this moratorium, saying that it cannot it cannot support all of the miners that want to use its energy. And as Eliza points out in this article, it's the latest in a series of pauses or slowdowns that Canadian power providers are doing in light of the 2022 bear market and in light of the current energy crunch that we are seeing around the world. Eliza, or Ion, I should say, excuse me, from CoinDesk reported on this earlier in November that Hydro-Quebec, the power authority for the Canadian province of Quebec, proposed to stop electricity supply to Bitcoin miners. The utility asked Canada's energy regulator to suspend the allocation of 270 megawatts that had been previously planned for the blockchain industry in Quebec. So, as both of these articles kind of point out, this is kind of an emerging trend where Canadian power authorities are trying to basically kick out miners is not the right word, because as Eliza's article for Manitoba points out, the 37 mining companies that are currently drawing power from Manitoba's power provider will not be kicked out. But it is, so they'll be grandfathered in, but it is a moratorium on future miners getting power allotments from these power companies. So again, it's a growing trend in Canada between Quebec and Manitoba, where they're saying that they really do not want to, they don't want to cater to these miners anymore. There's a lot of nuance here, too much to unpack in just the 5 minutes that I'm going to talk about this. It really deserves a podcast episode all on its own. But we've kind of seen a lot of arguments from the anti-Bitcoin mining camp before, that miners come in, suck up all the energy, and then leave no energy for the rest of the energy consumers in that area. And that's just categorically untrue. Obviously, there is a set amount of energy that these energy providers will produce, but they will not allocate more than they can to these Bitcoin miners. And as Manitoba's recent actions show, if they feel like they don't have enough, then they're going to cut off the pipeline eventually. And just one last quick note here at the bottom of this article. Manitoba Hydro's debt has tripled in the last 15 years. It took on loans to build 2 new mega projects totaling $2.75 billion US dollars. About 40% of the consumer's utility fees go to servicing that debt. So one thing to be said here, if they do have excess energy, that energy could go to Bitcoin miners to help service that debt. If there are no consumers of that energy, then it's just energy that's already produced going to waste and not actually producing a return for Manitoba Hydro. So kind of like wrapping up thoughts on here, the Canadian government and local regulators, they're not necessarily hostile to Bitcoin mining, but it has always been kind of a trouble for non-incumbent miners to get power contracts in the country. A lot of red tape, a lot of restrictions, and the most recent, developments with Manitoba and with Quebec kind of presage that these problems will not resolve themselves sooner rather than later. And last but not least, on our news docket today, Hut 8 halts Bitcoin mining facility amid energy dispute. Another Canadian mining story. Hut 8 could see its hash rate cut by 20%. as it has problems with its energy supplier in an Ontario facility. Basically, what is happening here um, is that Hut 8 is having a dispute with its hosting. I'm trying to think: is it a hosting provider or is it just their facility provider, Validus? Um, because Validus suspended delivery of energy to the site. Validus is claiming that Hut 8 did not make their payments to Validus. Hut 8 is obviously denying these allegations and released a statement about it last week. And as this Blockworks post, as this Blockworks article says, a spokesperson from Validus did not return the request for comment. I would find it somewhat hard to believe that Hut 8 stopped paying Validus, out of the blue for no reason. Hut 8 has a pretty strong balance sheet. They've got cash stockpiled, and they've got a lot of liquid Bitcoin. They have the second most Bitcoin holdings of any public miner behind Marathon, and their Bitcoin is also not encumbered in a in a like Bitcoin collateralized loan with someone like Genesis or Galaxy or something like that. So for Hut 8's part in this, they said that earlier this month, Validus Hut 8 had handed Validus a note claiming the energy provider neared default on its obligations of the two firms' power purchasing agreements, and blamed Validus for failing to hit certain operational milestones by key dates laid out by the terms. So all of that being said, it's looking like there's a lot of meat here on the bone, a lot of he said, she said from both Hut 8 and Validus. And it's just kind of another example of some of the problems that you can have with counterparty risk in this industry, especially if you don't own your own power and your own hosting facilities. We saw that not to keep bringing it up, but it's one of the bigger stories this year with Compute North. Compute North could not raise the power rates on its clients, while at the same time they had their own power rates raised because they did not lock in long-term power purchasing agreements, and eventually led to Generate Capital, their primary lender, shutting off their credit spigot because they asserted that Compute North was in technical default, and now Compute North is going bankrupt. Not saying Hut 8 is going to go bankrupt. That's not what I'm saying at all. What I am saying is, though, the more counterparties you have in your stack as a Bitcoin miner, the more risk you are, inviting for your operations, as we can see here with the Hut 8 Validus news. Obviously, Hut 8 feels like they were getting a raw end of the deal from Validus. Probably has something to do with either has something to do with them allegedly not paying their power bills, or having some other dispute on how to handle that going forward. And with that being said, that is all we have for today on the Hashrate Index live stream. Thank you so much for joining. Appreciate y'all tuning in every week. And if you would like to see analysis like this in written form, please subscribe to hashrateindex.com, our blog on hashrateindex.com/blog. Our newsletter goes out once a week on the weekends, and when I get around to it with more meteor analysis on the weekdays, with something like I'm releasing tomorrow, like the Compute North bankruptcy. And also check us out on Twitter at HashrateIndex and Luxor Tech Team. Follow us there, and tune in next week to the next live stream, and we'll see y'all next time. Deuces, y'all.